Okay, so this Finance Meets Real Estate. We meet here every Tuesday, 6:30 p.m. Eastern Standard Time. We have many different guests usually, and we do networking socials also, just as today. So I'm going to start with kind of introducing myself, share screen, and if you guys want to do the same, and we just essentially exchange backgrounds and possible ways to collaborate, and so forth. And so with that, I'm going to give it a start myself. Hold on, just 1 second. Okay, so I'm founder of RealtyQuant. So most of you know me, I think. But yes, so I run RealtyQuant. A little bit about my bio, I guess, just from my website. So this is my website, realtyquant.com. So I'm a financial engineer previously. So I'm Eastern European. I came to the US at 22. I did masters in financial engineering, and I worked in finance for about a decade, trading derivatives for an insurance company. And I've been in real estate the past 2-3 years, full time. And I run this webinar, and I also go on podcasts and speak on data-driven real estate investing. So my mission personally is data-driven real estate investing. So that's kind of what I do. I purchase apartment complexes currently. So I'm currently working on my third apartment complex. So I've been fully in commercial real estate recently, and before that in residential real estate as well. I do data analytics as well. So namely products like these here. So market valuations data, basically telling you which real estate markets are overvalued and their appreciation potential. And then lead generation, apartment buildings data. So that kind of ties to the second part. Myself, I use both of these in my own investing as well. And I also have a data-driven real estate investing course, which I've been busy to actually do, but that's the one. So it's kind of like machine learning, financial modeling, data analytics, has like different topics in there. Some of the topics, just if you're curious, so some of the topics include hold on. So kind of like basics of like Python basics and like data-driven applications, general ones, and from there like AVM, like automated valuation models. How if you want to do your own Zio's estimate type of thing in a simple setting, automated underwriting for residential, for commercial, some condition scoring, kind of like machine learning things, condition scoring, and like textual classification as well for different attributes you want to do in your property search, and market valuations. So the other thing that I mentioned as well, appreciation predictors, how to forecast appreciation in different markets. And there's a small module on blockchain also, and real estate tokenization. So those are like some topics that I've worked on myself. I've written like probably 10,000 lines of code for real estate in my career so far. So I've done like a lot of those things by myself. I have some articles as well, a few articles at our website in case you guys are interested. So the most recent one is basically in like, if we had a recession, and some of you have heard of that one, but investing like undervalued markets ahead of a recession. So this is a great topic. It just basically the main result of it is like a big table that is here, that's kind of like giving like a distribution of appreciation at different valuation levels, statistical valuation for different markets, and kind of the distribution of appreciation 10 years ahead. So this is for me like the most comprehensive thing one needs. I don't know, just as far as I'm concerned, from an appreciation standpoint for markets. Yeah, so that's it. I have a YouTube channel for finance meets real estate, as well as some of the other things that I do. And I'm gonna pass on to you guys as well for similar introduction. So this is our YouTube. So if you want to find like other videos of like guests that we have had, such as some of the guys on top, like Rodcliffe, Neubauer, etc., you can find them here. It's Finance Meets Real Estate on YouTube, has my name in there as well. So we have like many different videos. If you want to see like some of my content on data-driven investing, you can search me on like podcasts. So like basically these are the topics I talk about. So kind of like data-driven investing, undervalued markets, things like that. So it's all on the analytics side. It's not on I don't talk about like my own, oh, I've done this deal or things like this. It's not my focus. But currently my focus, I do apartment complexes. So also actually looking for a co-general partner on a 60 unit deal that I'm working on now. So if any of you is interested in raising some capital, let's talk. I think I still need one more partner there. So that's about that, and that's about me. So if you guys let me just unshare now, and yeah. So hold on.
I have a question, Stefan, before we move on to somebody else.
Sure. Go ahead. Yeah.
You know, regarding all of everything you shared and what you have going on, I know I appreciate these meetups that you do and all the great guests that you bring on and interview, and I'm sure the others do as well. My question is, how have you found these sessions to benefit your business? Like, I guess the question is kind of like, what is your motive with these sessions? Is it to potentially bring funds in for syndicating deals, or?
Right. Yeah, that's a great question. Yeah. So during COVID, we used to have many people coming to these sessions live, just because many people were going to live webinars. And so that was actually a little bit helpful in like growing my email list at the time. I would say to a lesser and lesser extent now in that regard. But the main usefulness for me has been partnerships. So actually finding partners for deals. So that's like the main way, be it like people in the audience or people that are guests of the webinar. So generally partnerships, that is definitely very useful. I'm pretty sure that other people who run podcasts have found the same. I think that's definitely there. As far as actual leads and people like buying your products, I don't think so much, because I feel like, you have so many different podcasts, right? It's pretty saturated. But it helped grow my email list a lot before. So that was like a big help during COVID, especially. Yeah, but yeah, partnerships, I would say, like Scott, that's like really useful, because you kind of meet with people, so it helps you then. Like some of the people on my current deal that I'm working on, like most of them I found through this community. So
No,
both
that's awesome. So that means you're going to keep it up.
Yeah, I'm going to keep it up for sure. Yeah, definitely. Yeah.
Cool. Do you have any advice for anybody who's looking to do something similar? Like I've thought about starting a podcast myself. You know that I have a lot of different social media channels, but I've never done the podcast. But how do you find all of these guests?
Yeah, so the guests I find, I'm guessing perhaps others as well, on LinkedIn. And recently I've gotten lazy and I just don't really invite anyone. And recently, mostly everyone is either someone that I just personally met or was referred to me by someone. So the recent guests and like some of the upcoming ones, they're all referrals. But if I actually want to do outreach, which is generally how I find guests, it's always just LinkedIn. So that's the best way. So yeah, so all these people I have found on LinkedIn, like some of these guys also wrote Cliff and so forth. So but I don't have much advice. I mean, I'm not like super experienced with podcasts. I feel like these things, they are saturated. Webinars do have a little bit of a benefit in a way, maybe just because there's so many podcasts. So sometimes some people prefer to have it live. So you're sort of differentiating yourself with this kind of older time thing, I feel, as if it's like more, it's less innovative in some level, I would say, like, or less trendy, but on the other hand, like fewer people are doing it. It's a difficult question, actually. I don't have an answer, but it's probably good to have like your focus and have like a very specific topic, but then most people they wouldn't listen to those things. So I don't know. So for instance, I would perhaps like input like some of the data-driven topics, but then there are going to be very few people listening to that. Even if you do like technology in real estate, I found like blockchain to be a very trendy topic. Like people do join for blockchain, but if it's any other technology, any other prop tech, then no. So like syndications, I think they're pretty trendy because it kind of gives the impression that you're doing something big. And sometimes you are doing something big. And so that's about it. But I mean, yeah, we are also on Meetup. So we are on Meetup. We're one of the biggest real estate groups in New York City, actually. Definitely top 10 on Meetup. So hold on, having issues with my computer. I think I'm going to change it, but and we are actually in some other cities as well. So I think we kind of like cut some of the cities to kind of reduce cost or something, but we were in probably about 10 different cities. And also there is we have a Facebook group as well, if you guys want to join it. Hold on. So yeah, so this is our Facebook group. So Finance Meets Real Estate. On Facebook, we have, I don't know, we have maybe 3,000 or so members. It's pretty easy to grow the members. It's not that useful, I think. So, but I mean, you can. So that one. So Facebook, Meetup, YouTube. We have some things on LinkedIn as well. Yeah, LinkedIn, I mean, Instagram, but yeah, but generally those are, Facebook group is useful, Meetup, YouTube, those are useful. But yeah, it's great for finding partnerships. I think like someone I met in New York, he also has a similar experience. He's found great partnerships through his podcast. So that is I would say definitely works. Definitely useful there. Okay, hold on. So let me stop sharing so you guys can kind of move on. Actually, I guess with your stories. So, I mean, Scott, do you wanna start yourself? I know you've been on this social several times, but let's if you wanna just do an introduction.
Yeah, I can just be quick because I feel like there's a lot of familiar names in here, but I'm Scott. I try to attend as many of these as I can. One big reason is because I've been investing in real estate for the past 10 or 11 years, primarily flipping houses, building houses, but various forms of rentals as well. But I was doing that on the side, and I left my corporate job about a year and a half ago. So I'm doing real estate full time now, as well as some other social media uh, stuff and some other side businesses that I've started. But that's what drew me to this to begin with, because I left my corporate job, I got out of the rat race, and I was working for myself, but I was like kind of missing the connection, you know. So like I try to hop on as many of these different meetups as I can. I like the local ones too, but I'm on the other side of the country, so I can't go to the local meetups with you guys. But I'm I'm in Phoenix. But anyways, that's my story. I'm a real estate investor. I have a YouTube channel where I post real estate news stories primarily. I'm doing the same thing in shorter form on Instagram as well lately and having pretty good success with that. But I just am kind of working on building an online brand right now. This themed around real estate, a little different than what Stefan was just talking about. I think my audience is more there for just the drama and the entertainment because I just talk about all these crazy real estate news stories that are happening all over the world, but I still have a lot of fun with it. So
Yeah. You want to show it still just for a second, Scott? I know you've shown it before, but for
yeah, sure.
Yeah, because it's pretty great. I follow your YouTube actually.
Do you? Cool. I'm glad you're enjoying the videos. Sorry, let me just see. So share screen, share. Okay. Can you see that screen there?
Yeah.
Okay. So like if you go to here, my channel, so it's under just Scott Edward. And you see the type of videos that I do, like China's buying all of America's farmland. One of my favorite architects passed away. I did a video about him. A lot about the mega mansions in California that are being built for like $100 million or more. Those are always big stories. I interviewed an industrial real estate investor 3 weeks ago, and I did a video about that. Learned a lot about the industrial real estate market. So a pretty good variety of real estate themed topics, but it's cringy for me to look at myself in all these thumbnails with these goofy faces, but it's just what you got to do to stand out on YouTube. But this New York skyscraper almost collapsed. That was a crazy story. So I put a lot of time researching these topics, interviewing people, putting the stories together, editing the videos, and I kind of look at myself as a journalist in this way. I'm just telling news stories on YouTube versus some people tell them over in other ways via like the bigger publications. But some of these videos are getting a couple 100,000 views, which is crazy. So I keep putting them out because the audience keeps growing and people are liking them, and it's another source of income for me, but it's also just a lot of fun. And I believe that having a brand online, like having a following online, there's a lot of value that comes with that. And I haven't even really fully figured out what I'm going to do with all of this attention or all these views or subscribers or whatever. But I'm just at this point cranking out the videos, and then I'll kind of like probably build out other income streams from this audience that I'm growing over time. I do have a real estate course that I offer for anyone who's interested in real estate investing, anyone in my audience, because sometimes I talk about my house flip projects on the channel. And so for those people who are here for the house flip projects and learning about becoming a real estate investor or house flipper, I have a program that I sell for $297, or I do like one-on-one coaching services as well. So like your typical guru type stuff, but I try to price it all really fairly, and I spend as much time with people as I can to help them out. Because when I was first getting started, I was on Bigger Pockets, but that was like the only resource. There really wasn't much for YouTube or like other free information online. It was just Bigger Pockets. And if you guys don't know Bigger Pockets, it's an online forum, like online education forum for real estate investors. Yeah, is this all you wanted to see here, Stefan?
Yeah, no, that's great. That's awesome. So, I mean,
anyone have any questions, or
what's your big advice for growing YouTube? I know you've given it to me before. I guess is it the thumbnails, and then duration is number 2, I guess, video duration. But thumbnails,
yeah,
are key, right?
thumbnails are big. That's why my thumbnails look the way they do. They're very flashy. They're kind of like you would see in a tabloid or something. Titles and thumbnails are important, but then also the video itself just needs to be really high quality. It needs to deliver. So like if you have a title that says $100 million mansion sold in LA, then the video needs to deliver and give you lots of good, exciting information and have good pacing and have a lot of good different pictures of the house that show up as B-roll. And it's a science. It takes a lot of time. But what I found is that, like you said about yours, Stefan, is that you need to you need to pick a topic and then just really stick to it. So like I have kind of picked real estate news as my topic, but I have a friend who does an industrial real estate channel, and that's who I interviewed the other day. All he talks about is industrial real estate. He does really well, and he's built up a really great community of people who are just all industrial real estate investors, or they're aspiring industrial real estate investors. So that's another big thing, is just picking one topic and sticking to it, and being consistent, posting every single week, no matter what, no exceptions. That's an important one too. So there's a lot of little steps to it, but yeah, I think those are the most important.
That's great. Awesome. So thanks, Scott. Appreciate it. That's awesome.
Yeah.
Do you want to go next? I'm not sure if he hears me. Yeah, Ethan, do you want to go next? Yeah.
Yeah, absolutely. So mine will not be nearly as long as Scott's. I'm Ethan Gao. I'm a corporate attorney and life insurance salesman in Houston, Texas. I got into real estate about 8-9 years ago. I've done about 400 single family fix and flip hard money loans. And then in commercial and multifamily, my role is to be a loan guarantor or a key principal on deals. So I hold a lot of my net worth liquid in my life insurance policies, so I can essentially qualify for most loans out there because of that. And then kind of a side business I do is when lead sponsors are short on fundraising and they have to close now, I will come in and lend them what they're short, and then they can pay me back with post-closing fundraising. So where this happens is, I'll just give it a couple examples. So one is somebody needed to raise $10 million to buy an apartment building in Phoenix. She'd only raised $8 million. She needed $2 million. She could not extend her closing date. She didn't want to lose the deal. She didn't want to lose, $500K of earnest money. So I came in and lent her $2 million so she could close. She then continued to raise money post-closing to pay me back. So I've done, a dozen of those type of deals, and I'm looking to do more of them.
That's great. So I know we spoke about a couple of months ago. How are you doing since then yourself, Ethan? Like,
it's great.
Doing more deals, more of the loan guarantor?
More of both.
Of both. Okay, that's great. That's great. And actually, so because you mentioned because you need to keep liquidity, right, for your business, and life insurance is a good place for that. So what rate are you getting on what interest rate do you get on your liquid funds via life insurance policies? I'm curious.
Yeah, life insurance doesn't pay interest; it pays dividends.
Well, right.
Long-term rate of growth is approximately 4.5% to 8%, depending on what your tax bracket is, because life insurance grows tax-free. So if you're at a high tax bracket, then it's worth more. If you're at a low tax bracket, then it's worth less.
Okay, yeah. So your dividends effectively, they come to 4.5% to 8% tax-free.
Approximately. Yeah, it just depends on what my specific interest, what my specific tax rate was for a particular year, and things like that.
Do you use which company do you use? I'm just curious. And do you do
so I personally own life insurance with Guardian, Mass Mutual, Nationwide, and MetLife. The policy that I really like for real estate investors is a Guardian policy. It maximizes the cash available to be borrowed up front. So with this particular policy, if you put in, $100,000, you can borrow up to $95,000 the next day.
And that's a life policy. Is it like IUL, like indexed universal life, or is it? What are some good?
That's a whole life.
It's a whole life insurance policy. Okay, sure.
Yeah, so there's it's just safer. I mean, with IULs, you're subject to what stock indexes and stuff does.
Okay, got it. So what's the best way for people to reach you also?
Just email me, ethangao@gmail.com, ETHANGAO@gmail.com.
Sounds good. Great.
Yeah,
Thank
thanks for helping me sell life insurance, Stefan.
Yep. No, I'm curious, I'm curious.
All of you, there's 8 of you on this call. All of you need life insurance, every single one.
Right. So, okay, so who wants to go next? Maybe Alex? Or if you just wanna, whoever wants.
Yeah, hello.
Go ahead. Yeah, sure. Go ahead.
Yeah, hi everybody. I'm a real estate broker in New York. I do like residential mostly, sales, investments, rentals. Work with real estate investors, mostly like residential apartments. And I was looking myself to start investing in a commercial real estate or like finding opportunity and join some partners to invest and just learning more
Mhm.
to become a loan partner and invite general partners, all that stuff. So just getting more, exploring more information, and it's great that you post these events online, and I was in person on a couple of them.
Yep. Yeah, we met
Just-
in person, right, Alex?
Yeah, we met a couple of times. Yeah,
Yep.
we talked about different things, and it's
Mhm.
great to be a part of the community, I would say. So great to meet you all, and yeah,
Sounds
I
good.
will
So what
keep learning more. Yeah, thank you.
So what kind of deals are you looking at, like commercial or residential partnerships when you mention on the investment side? Because I know you're
So I have like a large developer who has a couple of projects in New York City, and they fundraising money for one of the projects they have on Fifth Avenue. They are raising funds with the partners to invest, and they also have a couple of other deals in Midtown and. So I work with them, a couple of investment companies I work with for just looking for the like value-add opportunities, multifamilies, retail opportunities to purchase. So I'm not like a big investor myself, but hopefully one day become one. But
have you tried like capital raising, let's say, or not yet, that part?
Yeah. Yeah, I'm trying not to fundraise for them right now, but not for myself. I don't have any projects myself right now, but I'm seeing how they do it and what is required, how they're gonna benefit from it, how they're gonna develop the projects, how they're gonna be selling the project in New York City. And so maybe in the future, if I raise funds or become loan partner, maybe I'll start raising myself, but not at this time. But,
Got it.
It's very new for me. Yeah.
Yeah. I mean, I mentioned at the beginning, I'm looking for one capital raising GP left, 60 unit upstate. Maybe we've spoken.
Yeah.
So if you are interested, yeah, we can talk about it. Actually, it's a project. So
yeah, I keep in mind how much is it? Just tell me the number so I can just get an idea.
Raise or I mean,
to become your partner.
The total raise that we add, how much you need to raise minimum in that way, or
no, you mentioned you need one more partner to join you in a multifamily project. So I'm asking how much is
left?
Yeah, how much to become your partner? How much you have to invest?
Right, we can talk. I mean, the total equity short of 3 million. It's like 2.7 is the equity.
Yeah,
we have most of it, but yeah, it's pretty flexible, so we can talk. Yeah, it's kind of best effort, I would say. So there isn't like an exact minimum, more or less. So if you can raise something, I would say probably we'll meet our target because we are pretty much close to it already. So Yeah. So so really up to you. Yeah. We can talk. We can talk offline.
Yeah,
if-
yeah, yeah.
Sounds good. Yeah.
Uh,
Great. Thanks, Alex. Yeah.
I'm not sure if it's for me, but we can definitely talk to see if what kind of project it is and what is the potential. But yeah, let's
Sure.
we can, yeah, definitely. Okay.
Sounds good.
So I have to go right now, but great talking to you, and
You too.
we'll speak later.
Sounds good.
Okay.
Thanks for introducing
Okay.
yourself.
Thank you, guys. Bye bye.
Okay. So maybe could I pick maybe Steve? Do you want to go next?
Sure. How you doing? How you doing, Stefan?
Hey.
Hi, everybody.
How's it going?
Good, good. Yeah, my name is Steve Velez. I'm an investor, multifamily investor in New York. I'm not sure if you recall, Stefan, we met at one of Yosef's meetups out in Queens.
Right.
Yeah.
Yep.
So I'm in New York. I live in Midtown. Investing mostly actively in North Carolina and South Carolina. I also have some single families as well as some LP positions on some deals in Houston and Denver as well. I'm just looking to kind of build out my portfolio and multifamily in the Carolinas.
Mm-hmm. So as a general partner, you focus on the Carolinas, basically, right? Yourself.
Yeah. Yep.
So which markets over there currently you focus on?
Mostly, I would say just on the secondary and tertiary markets outside of Raleigh. We're also looking a little bit more in sort of the Winston-Salem and Greensboro areas.
Got it. That's great. And you work with Yosef and other people from like MIH Mastermind, or?
Yeah, so we're both part of the Jake and Gino community, and then we're both in the MIH Mastermind.
Got it. Got it. So how did you choose like those markets? You just
North Carolina?
Yeah.
Yeah. So yeah, I mean, there's a lot of good. I mean, there's just a lot of good job growth,
Sure.
a lot of population growth. A lot of people people pay a lot of attention to Florida and Texas, and North Carolina, I think, is 3 or 4 on population growth charts. You know, so I think that's a big thing. Tech is moving there. Biotech is a lot of jobs there as well. So it's basically it's just the numbers, right? Typical numbers we all look at. It's just really booming there. It's also very competitive, right? So I wouldn't say it's an easy market.
But in those, let's say, secondary, tertiary outside of Raleigh, let's say, is it competitive too, or it's relatively?
It is. At least my experience has been that the owners are not exactly moved this quickly based on the market shifts, right? So they're still kind of holding on to where we were a little bit. But it's just taking some time, right, for some of the prices to go down. Cap rates got pretty low there over the last year or so, and they're starting to move up a little bit more now. But sellers are still adjusting.
Got it. That's great. And so what are like your next steps? You're searching for, like, are you working on a deal right now over there, or?
We're looking into a few things. We just closed a deal in January in South Carolina, student housing in South Carolina. So that we just closed end of January. Yeah, thank you.
Congrats. That's awesome.
Yeah, thank you. It's good location too. It's right near the University of South Carolina, so the demand is pretty high. And then we're looking at a couple of things in somewhat near Raleigh now, but nothing tangible yet.
So what's your approach to finding deals? Do you do direct to owner, or do you speak to agents? Like, what is your preferred way?
Mostly brokers. A couple people I work with and partners, they have some good connections with some brokers as well. So that's been part of it. Second has been we've wouldn't say just recently, but relatively recently started a direct to seller campaign. So we started texting and just starting to do some calling as well. So a little bit of direct to selling, but that's very
phone number, more like phone numbers, right? They're just phone number direct to seller, not like mail. And that
no, we're not doing direct mailing.
Sure, yeah.
It's either been texting or calling.
Yeah, makes sense.
Yeah,
sounds good. Well, yep. The best of luck, I guess, in your next deal and the current deal that you closed, the student housing in South Carolina. So that's great. Congrats.
Great, thank you. If anybody's interested in investing in North Carolina, certainly let me know. I've been looking for some good ways. I've sort of been been sort of the underwriter for most of our deals. So, if anybody else needs help underwriting their deals, then certainly need to help.
Oh, that's great. And what's your background like before doing real estate?
I'm in IT, so I was in IT for 20 something years. So it makes sense that from an analytical standpoint, underwriting has been a strong suit for me. So I'm sort of in the asset management and underwriting space.
Got it. That's awesome. Well, yeah, nice chatting to you, Steve. So
Thank
appreciate
you.
it. That's great. Yeah. Let's talk more.
Sure.
And yeah, so let's see. Yeah, who else? Who else do you pick? I guess Eric, perhaps.
Sure. Let me see if my video works. Nope, unable to detect camera. Sorry.
That's okay.
No, I actually I nerd out on technology sometimes, and it gives me problems. Instead of buying a webcam, I tried to use my old digital camera and bought a cam link between that and my computer, and for some reason I can't get it to work. Just voice for now. So I probably have the least to offer.
Hold on. I think I just need to hold on. I just had to mute Alex. I think he left his phone on there. Go ahead.
I probably have the least to offer, and probably listening more due to exposure. I have a close personal friend who does commercial real estate, and my interest really has been geared towards following his ride. So he took over a family business that does freestanding retail, and they've gotten more into large multifamily development, but they mostly flip entitlements right now.
I
So
see.
my piece to this is before my first daughter was born, said, why don't you get your real estate license? Because plenty of times he identifies either properties or deals that there's a broker on, and he's like, you can get our piece of the commission if you make the call, so on and so forth. However, I had some bad run of luck for brokers that I was working under. They either wanted to push me towards residential, or if they were in commercial, knowing who my friend is, wanted to just use me to get access to them and push up their own deals, not really help me in any way with that space. So one of my challenges now is I'm trying to my friend has always told me, don't do anything for free, but I'm one of those people that I'll do work for free to get what I call as the tuition for you would pay for the education. So I try to do as much as I can on my own. I find that I was writing notes on the reference of to bigger pockets, which in the commercial space is probably not where you go. I think most people there either do residential or they're trying to work on syndications. I've also connected to many different groups, which is why I'm actually a little bit enthusiastic about yours so far. Everything else that I've seen is a bunch of wholesalers trying to expand their network. And again, wholesaling is usually residential or the poor quality properties they're trying to push onto other people to buy and get their piece.
In
Which
your
again is not,
Eric, if I may hold
Yeah.
you just there, your background before that, what or like full time?
so actually I am in finance. I do kind of operational efficiency, which again is what I was initially drawn to the group. I saw finance as the reference.
Sure.
And I originally was thinking it was financial professionals trying to kind of make their way in the real estate space.
It's been that actually.
Yeah.
Sometimes there is a portion of that for sure. Yeah.
Yeah. So
Mhm.
I personally don't really want to start another career job somewhere else. So I'm trying to do what I can with some resources from my friend and on my own to see what I can do to catch up to them. So I would say I'm in a bad situation for timing. So before COVID, he said, hey, why don't you work in my office and you can learn while they're there, but I was never allowed to work remotely until COVID. So another friend of mine actually took him up on the opportunity. And like I said, it was just bad timing to the point where my other friend has really become a key part of that business and learned through him being there, all day. to the point where he has his first deal with my buddy was, I think he kicked in maybe 200,000 of his own money for a car wash. Through that connection, they found somebody who's trying to expand to buy, put 20 more locations in Massachusetts. So he took his 200,000, they bought a property for 400,000, they turned it into 1.3 million in about 6 to 9 months. So he took that money on a 1039 exchange, and kind of they're 2 or 3 down from there. So now they're getting into the large multifamily where they're more flipping entitlements at the moment. So they would find a property anywhere between $2.5–4 million and do the entitlement work and then flip it to who's going to development. And lately they've been doing probably 2 or 3 of those deals in the past 2 years where they would kind of on their piece be in for $2–4 million and selling it anywhere between 6.5 and 8 million.
Wow.
Yeah,
that's
so
entitlements on like larger projects and before smaller.
yeah. So
Sounds-
to me, it's like when I originally got involved, I was trying to find the freestanding retail because I have, again, your analytics side is something that appeals to me. I would use GIS, if anybody knows what that is. So I would take the tax parcel records from Massachusetts, which is where I'm from, and upload that into a geographic information system software. Do you see it all mapped out? I would basically exclude all the residential properties, and I would start looking at all the commercial lots, what's out there, what's available, cross-reference it with national tenants already, because who's gonna sell a property with a national tenant on it? So I'm trying to find the more mom and pop locations around sets of lights and main roads. So like I said, I more do data to try to find properties. So I'm trying to find my way in terms of finding the locations for my buddy's next deals, and hopefully my piece would be, I don't know if you want to say a commission piece would be what I would get to contribute to the next deal. And then since they're in larger deals, my lack of funding to get into the deals that are in the millions is why I feel myself like being behind the 8 ball. So I started looking into syndications, and I wanted to see if I can learn from people who have set them up as a means to me get involved into the larger deals that they do. So like I said, I'm more from my experience have seen in the real estate industry seems to be behind the 8 ball with technology. Most people are what do they call drive for dollars? They're in their car doing stuff like that. And I just find it, even my friend only limits himself to like Boston and Providence, and just I think from behind a computer I can look at all of Massachusetts and Rhode Island and New Hampshire and technically anywhere else in the country to find things. And then it's just up to your network of somebody else who might be in on a deal that you've found.
That's correct.
So like I said, I'm all over the place, and my attention right now is more where should my attention be to maximize my value, and a way for me to get out of doing my career job and hopefully doing things on my own.
Since you mentioned GIS, so a company out of Singapore called Property Quants, they have some modules on GIS in their data science for real estate course. I'm not sure if you've looked into those. I mean,
no, I'll take a look at anything out there, and I am the type, unfortunately, that I start down a path and I lose what I was originally working on. So I started. Do I teach myself Python? I taught myself SQL for work, and I use that with the databases right now for GIS. So it's just like I get lost in the opportunity that technology can give you in real estate and lose sight of I haven't been doing what actually makes people make money in real estate. I more think of the problem solving than the actual the work.
Right. Yep.
So
I understand that. I've had some of that situation myself often, to be honest. Yeah. It's quite tempting to get kind of drawn to some of the technology and like more interesting work, especially coming from a background like that. So
yeah, and I think I'm a type to keep talking and collaborate with people on thoughts and ideas when possible. But like I said, my motivation is more that I see my two friends have kind of taken off in the last period of time, and I kind of got stuck with, not that I'm stuck with family, that family didn't give me the opportunity to run with them per se. So now they're
Well,
much farther ahead than where I wish I was. So I'm trying to do what I can to catch up now.
sure, I understand. Well, you can, yeah, I mean, using your data and like GIS stuff, find your own deals, right? I guess, and
Right.
pursue that. Okay, yeah, that's pretty interesting. I mean, sounds like they had some very high returns in entitlements. What do you think drives such high margins in that space?
So they're in the midst of deals that had started before the interest rate environment. They do have contacts now who aren't necessarily concerned with the money issues that are going on. They do have a partner that they've recently connected with that they do the capital raising, or he has I'm not sure if it was Houston, but he was originally from Texas, and he brought his a lot of his contacts, I think, in the industrial space down there, up here. So when my buddy does go and say, hey, we have a project here that we can contribute our, I don't know, the property plus $2 to $3 million as a stake for what would be maybe a $30 million project. This other contact that they've recently made will try to fill up the other 20 or so, or 25 million, and they would stay on for their 10% stake or so, while the end party would do the development and split their piece with them and take the property that they entitle as their contribution to the deal, and they would fund and build the rest. So
Yeah,
I would say they're
for our kind of audience, let's say, like, who may be listening this on YouTube after so forth, like, what is an entitlement and what is
so it's like
value that is
sorry,
created-
it's
what is the value that is being created by
sure.
your friends and yourself
so
and those projects?
Yeah, so what the deal that I got my first exposure to was probably a town or so over. It used to be an old industrial property that was bare for a long time. So they ended up connecting with the owner, and they kind of tied up the deal that says, well, let me do our due diligence and the work to try to get this permitted for an apartment complex. So they had an agreement with the owner, and they would do all the town work in terms of permitting and all the soft costs of environmental, industrial, to make the property as clean as can be to when it's permitted. So it's basically the town stamps and saying this project is approved, you can do the work on it, and they would sell that. So you've done all the dirty work in terms of limiting the risk on the property and getting all the approvals by the town, and you would sell basically the completed project in terms of permitting to somebody who's actually going to go in and fund the development, and they will either be the end buyer or the end owner of the property. But because you did all the early work, they would pay you I guess a spread, if you want to call it. So in the last couple of deals, it would be they found a property that's between, let's just say, 600,000 and 2 million, and then they would do all the architectural work and environmental work and town hall meetings. And the last couple of deals they've sold for a spread of about $2 to $3 million was their time and effort. So that would be entitlement, would be basically the approvals from the town for the project, and you're selling that onward.
How long it took them for the for that spread, like to just like go through the process of all the soft kind of
I mean, they may have been
progress.
they may have been lucky in those deals, but those are the last couple deals that they have been netting almost double their cash on what they've put in.
Right, so double in like 2 years, this kind of situation. 1 year.
Probably 18 months, maybe, on average, probably plus or minus 4 months. And it, up here, and unfortunately, New England, having to deal with how weather affects work as well, so that could add delays. So you kind of build in without extensions, you could be talking about a year, but with extensions and other problems that are unforeseen, you can probably push it to 6 months to another year.
Mhm.
So I say on the long end, 2 years, on the short end, just over a year.
Mhm. It's
That's
my
And
that's
then do you
kind of
know,
sorry, that's kind of why it appeals to me, because I do have a full-time job, and that's why I don't really do residential, because I know residential you have to kind of push. They move faster, yes, and you have to do, and you can do more of them, but the timeline of a bigger deal works more with the fact that I actually have a job and family to deal with. So I could do work for a year or two to make whatever your payout would be.
sure.
so I had a question. I'm not sure if you know this, Eric, but I know you mentioned car wash before, but what I'm kind of picturing where this would work, like in my market, is you find an old vacant office building, put it through the entitlements to convert that into apartments, and then sell it to a developer who's actually going to do the build out. But I have, I guess, two questions. One, are they going to just owners of these buildings who don't necessarily have the building up for sale, but they're just going to the owner because they know the building's half vacant or whatever? And then my second question is, are they paying for all of the work, like the architectural fees and engineering and permitting fees? Because that can add up to several $100,000. You're putting a lot of money at risk on a property you don't even own yet. So that might be a loaded question if you're not involved in these deals directly, but
So that depends. I know I heard maybe he left somebody who was a broker on the call. I've, for some reason or another, the only people who, not to squash the industry, the people I hear that you need to work with a broker are brokers, and everybody else that at least I've talked to that invests tries to not deal with them unless they're desperate or having a hard time finding what they're looking for, which, yes, that's a need for them. Most of the deals have been properties that they find off market. So one of them was actually down the street from a freestanding retail that they just worked on. They drove by it every day. They just saw this big property and there was not a sign on it. And it was many years ago, an old cemetery that ended up having tree overgrowth. There was, 20, 30-foot trees on it now. So it's been that way for a long time. So it was actually turned out to be owned in a trust of a rich family who just, it was part of their ownership in the trust, and they just never looked at it or cared that it was there. It was just in there. So they tracked it down, they got a hold of them, and they basically just took any offer that was reasonable because they weren't doing anything with it anyway. So in that sense, I would call that property lucky because it was completely flat ground in a commercial area. I have no idea why nobody else had tried to get it. So the entitlement and everything, the work there was easy because there was no environmental stuff. There was no like former industrial property. There's no gas station on it. You don't have to worry oil or gas in the ground or chemicals. So that was pretty easy. The one that they're working on now actually is across the street from an airport in Rhode Island, which fortunately again was overflow parking that they had just rezoned to do commercial apartments there. So again, that kind of lucked out in the sense that they just have to deal with rezoning for that. So to
Eric,
me, go ahead.
go ahead. No, you go ahead.
I was gonna say to me, finding the properties that brokers aren't actually trying to sell has been what they've been lucky finding right now.
Sure.
If a broker's trying to sell it to you, usually you're in their Rolodex of contacts of they're trying to push a good deal because they want to get a transaction as fast as possible, because in their network, something that is low risk and easy turnover is why people use the broker. They don't want to put their money at risk or time at risk. The things that take more time and effort are usually the off-market deals, which if you're going to entitle that's the avenue that people might live in. Here's so I can create my space of, I do have the time, I do have the effort to turn into something worth
Mhm.
buying or selling, which would not be something that typical
Right.
commercial brokers are
So-
doing.
Right. So off market, let's say for that. But in terms of like what, let's say Scott mentioned, do you see like with office being, kind of down overall and, not in a great position compared to other commercial real estate? Like, do you see those conversions from office to apartments and doing the paperwork for that is a good route, or do you more focus on like purely like land? And
It could be either. There's actually just 2 weeks ago, there was an old office building that was going up for auction.
Mhm.
And it wasn't my friend or contact, but the person that I talked to was actually trying to raise funds. I think he had already planned it out that at auction they would buy it for I think it was 500,000. And they had a plan for 25 million for the conversion. And he said he had already found who would get the entitlements from him if he did the work.
Mhm.
So that's third party. That's not a personal connection of mine who said that this is a plan that he had and they had somebody who's going to buy it off of him. And that was 2 weeks ago. So in that space, you save money and not have to build the building. You're just retrofitting. There might be appetite for people to do that. But my friends and the experience that we've had, it's more been land without an existing building on it.
Got it. Okay. Yeah. Well, that's very interesting. It's very interesting. So yeah, we may be seeing perhaps more of these conversion kind of entitlement, zoning, if you will, opportunities, I'm guessing in the future in this period. So that's a great space. I'll think about it myself too, actually. So after this call, so that's awesome. Thanks, Eric.
No
Appreciate.
problem.
So we're a bit over time, but Walter, do you want to speak up? I'm not sure if he hears me.
Unfortunately, I'm not anywhere quiet. I'm just listening. Sorry about that.
No worries. Yeah, hey Walter, how's it going? Sorry, what?
Good information. I appreciate it.
Okay, so okay, got it. Okay, it's fine. Okay, got it. Yeah, Nick, do you wanna speak?
Sorry, guys, I just joined the call late. Thanks again for putting this together. So I think, like you, I come from a finance background, but I've always been interested in real estate. I've always owned rental property for many years, and I guess I'm coming to the end of my career in the next few years. I'm looking to make potentially a couple more investments, hopefully, in the next the next couple of years. And I'm somewhat open as to what that is. We are thinking about doing more short-term rental, potentially out of area. So I do live in the New York area, but we're looking in Pennsylvania primarily. But I'm somewhat open, to different areas. As well as I'm also interested in just networking in the prop tech area. I have a strong technical background as well, so I'm kind of interested in just different projects that people that may have in that area.
Right. What applications are interested in prop tech? More the machine learning, like recent, like
right. Yeah. So I do actually work as I do work as a data scientist or machine learning engineer. So potentially there's some benefit to that, to doing some kind of automated process to evaluate investments.
Yep.
Identifying and just essentially improving the speed at which you can identify and potentially do an initial evaluation of projects. So I kind of understand that process, and maybe there's some kind of opportunity there to work in that space. So maybe not just just to investing, potentially developing some kind of systems as well, to help.
Right. Yeah. Essentially, kind of like automated underwriting, right? And deal.
Correct. Exactly. Yeah.
So, yep.
Correct.
Yeah. I mean, your background is definitely that's well suited for that, right? Pretty much. Especially with recent developments in the field. So it's gonna get pretty interesting, I think. I do agree. I think that's going to be one of the big applications in PropTech, perhaps, but let's see. So what kind of rentals you've been doing, like small multi, like 2 to 4 units?
So currently, I just,
like-
I just have a couple of single family houses. I live in Westchester County, just north of New York City. So that's what I have. But yes, no, I'd be interested in doing more. Multifamily, I think is it's always been a good opportunity because it's kind of in the middle, kind of falls under the radar of larger investors, but still there's definitely more scale than single family. Of course, we've just had a boom, so maybe maybe returns are not so ideal at this point. But definitely, I'd be interested in doing some multifamily. I'm also somewhat I'm also somewhat handy myself, so after owning a property for so long, I'm fairly good with repairs and whatnot.
Right. But we haven't had too much of a boom in the Northeast, so
Right.
So just the
Well,
same
in general,
time,
yeah, we didn't have correct.
it's
So
just
we don't
time.
have the same volatility as a place like Miami. During the last crash, in 2008, Miami, Las Vegas, these have always been very volatile. So they had much bigger drops. They also had much bigger run-ups. Recently, Miami, Las Vegas, these have had huge run-ups. So just in general, we tend to be more stable. I agree.
Well, back then some of the markets, they exhibited quite some downside, less than Miami.
Yeah.
But actually now it's different. So just saying, don't look at that.
You're right.
But I know what you're saying. There is this kind of, one can almost think that, let's say, Miami and Vegas volatility is kind of inherent to them. I'm not sure if it's inherent.
Yeah.
Sure, but one can almost think that way. But yeah, I know it's an interesting question, but yeah, I feel it's just a regular time to invest in the Northeast. There's no issue.
Right.
Not, it's not expensive or anything. But so that's interesting. Yeah, I feel like, because I started with small multi. I've never owned a single family myself yet.
Okay.
So I did like 7 small multifamily deals, and then I switched to commercial. So then I switched to apartment complexes. And I'm doing my 3rd apartment complex. So basically I'm doing basically my 10th deal now. That's my background.
Wow.
But now,
excellent.
but as far as the small multi, what I find, my view on that one is just it is the optimal for cash flow for sure, right? I mean, because you get a multifamily, but you don't have, it's not priced by its income, so you can find outlier cash flows for sure in that space.
Right.
Now it's not so easy. I wouldn't say you find outlier cash flows if you're close to New York City. I would say no. Even commercial cap rates are still higher than those. I mean, I had my first property was a 4-plex. That one had a relatively high cap rate, maybe like 8.5, meaning like a true 8. That was pretty high. That was close to New York City, New Jersey, but that's an exception. It's still not apples to apples. It's still, if you factor, it's still self-managed. So then that's going to reduce it if you compare it to commercial. But generally, yeah. But if you go further out, if you go upstate New York and you do small multi, you can find like crazy cash flows with other volatility. But that's just my experience, because I did some of my residues. First, I was like, my first ones were next to New York City, and then the next ones were upstate New York. And they did have, so just my observation. I was doing in a data-driven way. So I was like web scraping probably around 6,000 multis within 3 hours of New York City, and partially underwriting them as well.
So back in the day, I actually did write a program, did something similar to what you're describing.
Yeah.
So it would identify properties, and then it would, go off to like Zillow API, et cetera, try to get some kind of price and identify the ones that were, undervalued, et cetera. So I do think there's a lot of value.
Too. You can run your own AVM also on that one to find mistakes. Yeah, you can, you can build like an AVM, because I know you're into that. It's like an AVM, sort of the basic version is like a gradient boosting regression, right? This kind of thing. And then but yeah, just saying. So that also works. But right. So
that's interesting. Okay.
Mm-hmm.
The other point I would make is that so in general, financing, financing a multifamily, of course, is preferable than commercial, oftentimes you can get a better, a
That
better
is
rate,
true.
less down, etc. So
You do, yeah, you do get better. It's interesting. I kind of started liking the commercial ones now more. I feel you can make the same relative returns or higher even rather than absolute. The other thing is
Right.
you can look at the distribution, the notional distribution. So you can think of like a residential, what is the price distribution? And it's, let's say, I mean, it can be under 100K, but let's say like 50K until $1 million, up to $1 million, right? I mean, then there's about $1 million too, but generally if you're looking at like small properties, most of them like 50K up to $1 million, this kind of distribution. So let's say something above $1 million is pretty pricey, right? For investment. And where you can get like super outlier returns is if you're buying those sub 100K like properties and get like 25 cap and things like that, right? And where you don't get, you're buying like 800K properties or something like that, like the higher end of the price distribution. But in commercial, the same thing. But now the distribution starts at 1 million. So now it's like 1 million up to 20 million or whatever, and so forth. But now you can find now something that is less than 2 million is extremely cheap, and you can find inefficiencies there, and just your notional is bigger. And so I've been looking at that as well. So that's kind of a good way. You can also find cash flow for some of those, even though they're priced by cash flow, by cap rate. So you don't get an inefficiency in the cash flow. Like commercial is not for cash flow. I don't think it is. But then that cash flow is more leverable into, because it affects valuation. So you can kind of lever it into value, generating values.
Right.
So
that makes sense. Yeah. No,
yes,
that's really interesting.
Commercial is an interesting route, actually. If you want to try that one, it's I think it's a profitable route potentially for some people. It's also a hassle, but so yeah. Okay, nice chatting to you, Nick, as well.
All right, thank you.
Thanks, guys. Yeah, good seeing everyone today. Have a good night. Thanks.
All right, have a good night. Take care.
Thank you.